Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, August 11th, 2023. It's 9:50 a.m. Eastern Time, so I'm starting the video. So I wanted to get this one out to you early, kind of give you my thoughts on the market as well as where the opportunities appear to lie right now to make some money. QQQ continues to play out as expected, put in that big divergent high. For many, many reasons, I believe that has a potential to be a major, or the top, I'll say it, it's been saying it, the top end of a bear market rally. We'll see. Nothing to get excited about so far. We're only down off the highs, 6%, if that. Yeah, right around there. Sort of feeling a bounce today. I know we're down right now, and this is just kind of gut feel stuff that we're getting close to at least a reflexive bounce here. Now, I'll give you my thoughts as the day goes on, and I'll let you know before we head into the weekend. But here's what I'm looking at. QQQ coming up on the 50-day moving average. Now it's moved through there before, but overall traders tend to buy the 50. And I have the exponential. It's this yellow line right here. So they bought it there. When you're below it, it's resistance. There's two reactions from below. Once you break above it, it's support. Right there, you had a one-day pop, but overall, it does a pretty decent job. And algos will come in and buy it. Here, you recovered it right here. Back tested. Let me turn off all the other lines there. Now you can also put up the 50-day simple. Some traders are going to look at that. I'm using the exponential here. So there's one level where the dip buyers should step in. They usually do, at least for a bounce. Now you can slice below there. What this market's done in recent years, for at least I've noticed over a decade now, the algos know where the retail crowd and buyers are going to step in. They know support, resistance levels, key moving averages, and the big money, the money that can move the markets, and these big firms that run those algorithmic trading programs, high frequency trading, and all that other stuff. And they'll often take you down. If you see a well-watched support level, they'll take you below it, make it look like a breakdown to suck in some shorts, which especially near-term active traders, that are hot money. And because therefore, if they can then gun it back up, they know those shorts are going to have their stops right above the breakdown level. And then it's going to trigger that buying when your short cover goes up. So keep that in mind. You got to use fairly wide stops and almost anticipate these whipsaws, the nefarious forces that be, and try to think like them. It's like the old art of war thing. So anyways, there's QQQ at the 50. I'm going to go over a few different charts, a few different indexes, and show you where I think we're going. So let me just make clear, in the coming days and weeks, since I do believe this has the potential to be a major top for everything I've been talking about for months now, not just in the last week or so. Divergences, bear market rallies, fundamentals, overhyped, overcrowded bubble type trades and everything else, divergent breadth, negative breadth, all kinds of stuff. All right, so kind of swing of longer term view. I'll probably put a level right now for you. If you are a typical swing or trend trader, here's the levels where I think we're going to have, or potential targets, let's just say, if you don't care to try to game, because, trying to game the bounce, especially once it becomes clear. And this is that stage where you can see the dip buyers. This is kind of their rut row moment. They keep buying these dips since we pulled back because it worked so well for so long, and all of a sudden it's not working. And so then they tend to at some point throw in the towel. So you could get that quick down there, and I just wanted to give it to you. That's 357, about 357.40, and then 347. And again, I see the potential for a lot more downside. This is just one of many charts I have with many boards. I'm going to put this other uptrend line there. So there's your uptrend line off the lows. That's going to come in together. So that's a nice sweet spot target right there, about 357 and change. And that uptrend line should come into play. And then ultimately, I think we're going to go a lot lower. And I have other targets down here that I've given you on the 60-minute time frame, such as this trading range. I think that's a big one to come in and back test, the top of that trading range. That's where you broke out above and kind of was the catalyst for this whole thrust up to where we're at now. So those are some of the longer term targets. 60-minute chart, the realm of the active trader, swing trader. I have a little note here. I have a clean board for you so your head doesn't spin when you look at all those lines. This is what it looks like on my clean board, meaning not a lot of lines everywhere. There's your divergent high, been building. About this point on, so we start to get the comments, divergences don't work, just buy the dip. And then when you get that, again, like a crescendo of cries of it's capitulation where everyone's mad, they missed the rally and want to go in dip buying mode. That's about the time. That's a contrary indicator, and that's about the time that those rallies usually end. Now, look, again, no high-fiving for, if you've been short lately. And again, I've been overweighted and, recommended to be overweighted the semis in tech. So, that 6% drop in QQQ is profitable as that might be for an active trader, short-term trader. You would have made a lot more in the others. We'll get to those in one second. So that's a resistance level if we do get a kickback rally. And, I just reversed right before this video, and I'll show you why here. Reverse meaning cover those shorts. I've been swinging, but talk about active trading and keep getting these 5-minute divergent lows, and they're good for these bounces. And one of them might prove to be a little bit more. Let's look at that. Let me get back to my regular board. So you still have on the 60-minute this divergent low. We keep diverging, just like we did here. And as I like to say, things like negative divergence don't matter to the bulls until they do. That's my version of a yogiism, when overbought conditions and fundamentals don't matter until they do. And at one point they tend to matter, is my point. Sometimes it can just take a while. So there's these positive divergences that have been building, and they're still very much in place. And they could lead to an even much more significant rally than just these little bounces I've been gaming lately. But there it is. I just want to point out on the 60-minute chart, here's QQ on the 15-minute chart right there. There's your divergence. You remember you had this little whipsaw, which was bearish. And as covered yesterday, it was a breakout, remember? And then said if we go down there, then that's going to be quite bearish. And we did. The breakout failed. However, you still have this divergence. And these are, you can't use the word immutable forces, because mutable can't be changed. Or, these divergences can get burned through. But overall, the intermediate term trend since, going back to October, at least in the NASDAQ, the beginning of the year, is clearly bullish. And so you have to respect these divergences. And then there's more to that I'm going to get to here in a second. So here's that 5-minute chart. Again, simple stuff. It's been great for active trading. Divergent low, pop. These are all 1+% pops. There's that divergence still very much in place. You're probably getting to that point, and you're coming up on the 50 days, some key levels, which I'm about to get to. This is just the index itself. Let's do that. Let's change gears and go into. So I gave you the longer term picture. If we do break down here, you got about another 2.3% downside to a really good support level. Where if we do get there, I'll most likely, if I'm back into shorts, swing accounts. Remember, I have long term accounts. They'll stay kind of put. I don't actively trade. Trading accounts where I'll game these little squiggles, what I call micro squiggles. The little counter trend moves within a primary uptrend or a downtrend. So there's your level. I suspect a bounce before we get there. Where to? I'd be really nice to see it back up to here at about 372.84, 372.90. That would be a bounce of 2%. If we got it, great. Maybe a good area to reload again. Close out any longs back into shorts. That's QQQ. Now let's look at everything else. There's SPY. Okay, so here's what I wanted to cover. I've had this target here for a while. Good support level, 440, roughly 444 right there, right? You also have, I don't know if you can see it in the video, I have an uptrend line right here off the lows that comes in perfectly as well. So here's dual support at SPY right there. You have a major reaction high. Here, I'll zoom it in for you so you can see it. You have two distinct clear reaction highs. There's your breakout candle. So this is basically a back test of that. The fact that we're a hair below that line, it's even better now because that's what you need to almost get. I almost, again, and it's taken a long time to do this, but I've learned to kind of morph and think like the bots, the computers and the algos that are the nefarious forces trying to read where traders are going to buy. So you almost learn to buy breakdowns and cover shorts where most people want, the conventional traders are going to go short and then get smoked, when they reverse it. So look, but again, look, now we're back above it. So that's good. There's a little whipsaw. So that's that. You got the 50-day exponential just below. But again, very good support on SPY. We've been down for a while. We're getting near-term oversold, not nearly on the daily charts, but the shorter-term charts. And there's that big divergence. So here's my 60-minute. I've been highlighting this range here. Again, that's really good support with trend line. So that's it. So we're at support with positive divergence. The biggest drop in the market in months, at least a month or more since that one. That had same thing here. It was a bullish falling wedge right there. And boom, you see what happened afterwards. And that one didn't even have divergence. So, all right, guys, I don't want to beat a dead horse, but I want to show you where I'm at, and that's why I'll get the video out. And here's that divergence. Just keeps. So you had a whipsaw there, but and yes, I said yesterday it would be bearish, and it was. Once you failed it, there's where you failed the breakout, and you did. There was another some more downside, so that was a reason to come into the day short. But I think time to reverse. Now let's look at the big market leaders, because that's really a huge factor in my trading. There's Apple. Remember the other day I said we got close, but probably I favored one more thrust down because you weren't all the way there yet. We came again close to my 176.15 target, but not close enough the other day, and there it is. So that's now to me effectively a hit. I don't even care what the low is. It's when I'm eyeballing it, we've hit it. So yeah, 176.55 versus 176.15. So 40 cents on 176 point security is virtually a hit. So because of this, I am now long and strong. And you have Microsoft. There's Microsoft just below the trend line. But again, this is what the algos. And you have to take it all collectively too, guys. It's not... if one breaks down, I always say this, if the QQQ breaks down, but then at the same time SPY is falling too and catches support and bounces, then the breakdown in QQQ will probably prove to be false. So if the buyers step in here, they're going to get Microsoft above there, and then all the people who are what I call myopic or nearsighted, and only if they're trading Microsoft, they're only looking at Microsoft's chart, they just shorted it because it broke this 324 ish support level and the uptrend line. It's already below the 50, and so those shorts are, if I'm right, going to get squeezed out. A little pop here, and again, these big divergent highs say we're going lower. To me, it's just a matter of I don't like when I'm long. I don't like riding out pullbacks. Sometimes it's a necessary thing, especially if you're swing or trend trading. You just need to stick with your plan. But as an active trader, if I can sidestep, or better yet, which I like to do, is profit on a counter trend move within a trend, all the better. So that's what I'm looking at here. There's Alphabet coming up still above big support right here. So I just showed you Microsoft virtually on, a hair below support. Apple on, and Apple is very important. You don't think they're going to start stepping in? All those folks that were just praying for a decent pullback in Apple that never came, and now they have it. Even if Apple is going a lot lower, which I think it is over time, made that case, rarely goes like this. It usually goes something like this. All right, and back and forth and stair steps down. Amazon, nothing much to report there. Nvidia on the 50-day. And I'm just eyeballing through these daily charts here. I'm not going through the 60 minutes. Sometimes if I click on a 60-minute chart, I might have a level that shows. But there's some support. There's a look at that, a gap backfill on Meta. Even I imagine the most ardent bull was looking after this move for at least a pullback and looking to buy an objective level. And there's a gap backfill right there. So boom. All right, that's enough. So I've just showed you a lot of market leaders, a lot of tech. And then, of course, semis. Semis, I'm still calling down lower, ultimately minimum right here, 42.50 in the uptrend line on SOX. That's been one of my favorite trades recently. And it's dropped, like I said, it most likely would. You get more bang for your buck. So you're down 9. It's down 9%. Breakdown, back test, and everything else. All right. Okay, let me just say what I'm going to get through. But just other things I did today. I just covered a short on Treasury bond ZB. Still long. The other day I threw out gold and silver. I still like them. Let me give you that, and then I'll move on because I can't do it all. I wanted to get this video out quick and maybe just limit it to the equity markets. But so here's the euro US dollar. This is kind of, remember, bigger pictures. We've just put in a divergent high, and I do think the euro drops further over time, but in the very near term, if you are an active trader, as a lot of what this site is about, there is that I think I just gave you this the other day, divergent low, which is bullish, breakout right here, ripped up, and then we established this second, that was off the minor downtrend line. Then we established this bigger, more significant downtrend line with lots of reactions. Where's my box tool? 1, 2, 3, 4, 5, 6. Breakout, back test, TA 101, go long. If you don't trade the euro, I chart the euro to trade gold and silver. So I think gold and silver, I still think we're going to get a pop here, most likely. So those are the things I'm looking at is basically, and it's a very micro call, which I may flip around on, but a little pop today, maybe rally, near-term upside in the equity markets if we can hold this level and start to bounce and hold those divergences, and then down. Maybe by the close today, go back short. We'll see where we're at. But I'm leaning towards, so because of the longer-term sell signals on the daily and weekly, I'd rather be short into a weekend than long, even if the short-term charts are constructive, because the long-term charts, override that. So that's equity market. Again, if you're not an active trader, just disregard the little short-term stuff. I think gold and silver, the RR is pretty attractive. I'm not in love with them, but again, based on this euro, you can just game these little micro squiggles, some opportunity there. I gave you crude oil today, but it gave you the aggressive and the conventional entry. The conventional is a break of this uptrend line right there. I got the chart. The chart was done in pre-market. Let me fix the lines here because in pre-market they kind of move around a little bit. Yeah, basically that, give or take, we're right about on, right above it right now, and so you already have your targets there. Natural gas, I mentioned that the other day. I give you a scale-in zone to get back into. It's recommended, or anticipated a pullback there, so the odds were action perfect tag. Remember, we went 1 penny above my 807 target, so that allowed you the opportunity to get out or short it if you wanted for a pullback. But this was and still is my scale-in zone right here, and we came very close to the bottom of it. So I still think, again, the RR, because this is in a it's in a near-term uptrend and very constructive chart. And I mentioned a week or two ago that I was favoring natural gas over crude. I thought there was more upside, and it was. Natural gas is ripped. So again, turn off all the lines and just know that this is all the makings of a near-term uptrend right now. There's your higher high, and so in an uptrend, what do? You buy pullbacks to support. And you don't get married and fall in love. You can have your stops depending on where you think it's going. If you're a very active trader, you're going to have a much tighter stop. If you're a longer term swing and trend trader, you can allow a wider stop. So to summarize, very short term, bullish equities, kind of, with a finger on the trigger, don't get me wrong, but then intermediate, talking weeks and even months out, bearish. Bullish natural gas, more of a trend trade, but also a re-entry on, after closing out. And crude oil, I think we'll get a little bit of a pullback, but that's still pretty bullish that it broke out recently. Alrighty, had to pause the video there, take a call, important stuff. Okay, wheat's still there. It's not doing much, but it's still at that uptrend line, and still I think offers an attractive RR for a longer term swing and trend trade and re-entry back, for those that took profits at T2 and that level there. Longer term charts, especially, we're coming off that big divergent low, still look constructive. So that's it in the kind of near term, like I mentioned on treasury bonds. I don't know if you're trading that. I do think the 30-year is going to probably break out the yield and head up, and we'll probably see TLT, and it's the 30-year ETF or ZB or your futures, ultimately break the low. Just in the near term, like I said, I'm just active trading that one. Let me see where else I have opportunities for you. So natural gas I already covered. Markets I covered. Crude oil, gold, silver. I think right now the RR is pretty good for at least a bounce trade based on that, the euro. And of course that would mean GDX as well. All right, that's it, guys. Let me get the video out to you, since it's somewhat time sensitive. This has been Randy Finney with Right Side of the Chart. Have a great day.